You were listening to chartingwealth.com for Friday, the 12th of August, 2016. We're going to jump right into the markets. We had an up day. The market up, total market up just about 0.5% at 0.48. S&P 500 up 0.46. The Nasdaq 100 up 0.44. Gold down 0.68. We're going to jump right into these charts, starting off with the 2-day and then go to the half-day or 4-hour chart. Remember, the big chart is the one that gives us our trend, and then we look at that smaller chart to give us our jumping in and out points. The market is struggling to stay up. The MACD has not crossed over. We're still technically in an up move. Derivative oscillator looks like it's about parallel where it was on the last 2-day candle. It's about the same. It might be losing just a little. No, it's pretty much the same. So what do we have going on as far as our candlesticks go? Well, we have the first day of a 2-day candlestick, a green upward candlestick. That is the third in a row after 2 down candlesticks back on the 2nd and the 4th of August. And again, these are 2-day candlesticks, so we're still in a continued uptrend on the total market. Like we said, the market was up 0.48%. If we look intraday on the 4-hour chart, what do we see? Well, if you recall back on the 10th, the market went down in the morning and the afternoon, touched our 2-day trend line, and then popped right back up again and crossed over going up, which gives you what? Another potential entry point like the one you had back on the afternoon of the 5th of August. We now have another potential entry point. Again, not a strong entry point, not nearly as strong as when the red derivative oscillator flipped to green. We see that when this move took place in the afternoon, it is a much weaker entry point. However, the market is continuing to go up. If you recall the weekly review and forecast, we talked about retail sales being announced this date when I'm doing this on Thursday. And of course, they were good, which may be one reason that the market boomed up better than expected. So let's now go back to our 2-day chart and give a look at the S&P 500 as represented by SPY. It was up 0.46%. Again, 3 2-day candles moving up, representing 5 days since this last candle. It's only the first day of the 2-day candle ending on the 11th of August. We again are still in an up move. Technically, we do see that the derivative oscillator is holding its on over the last 2 candles, so we're in a confirmed up move. Let's see how the 4-hour chart played out. It crossed over in the morning going up, gave you another entry point. Again, of some concern is the fact the derivative oscillator is continuing to lose speed. Our Heikin Ashi candlesticks, average pace in Japanese, that is continuing to move up. Those candlesticks and the MACD and the signal line have crossed over going up and are diverging, not converging. So another potential entry point in the morning on your short chart to get into an S&P 500 play. Again, remember, we wait for backups, that is for the market to move in the opposite direction on the short chart as compared to the big chart. Then when it rotates over and starts going in the same direction as the big chart, that's when you look to jump in. It's the safest way to enter. Sometimes those setups don't occur, but when they do, you want to use them when you can. And again, we're all about practicing. You're using virtual money. We're not a stock calling service. We're not telling you what to do with real money. I want you to practice, learn how to read these charts, and you can make the decisions on your own if and when you practice enough and get good at this. All right, let's now go back to our 2-day chart, and we're going to go to the Qs. The Qs are up 0.44%. We continue to have a nice clean up movement on our trend line and our still well within our Bollinger Bands. We are continuing to see nice, strong up movement. We have the MACD and the signal line. It does look like the signal line and MACD might be getting a little closer together. Derivative oscillators losing some energy, but still confirmed up moves. We're still, and we're going to redraw our 2-day trend line a little bit. We're still tracking along just fine on that. We're above the 2-day trend line. If we look at our 4-hour chart, what do we see? It's interesting, we are still below as far as any entry point goes. Still have the derivative oscillator is negative, and the MACD crossed over going down on the Nasdaq or the Qs, Nasdaq 100, back on the morning of the 10th of August and hasn't crossed back over yet to give us an entry point. There have been many entry points since this strong up move took place, and we have our charts replete with them. Those of you who've been practicing entered at these points have done quite well. We're still above our 2-day trend line, feeling good or better, we would say, about the Qs. Hopefully you've done quite well. I've gotten a lot of emails from you that have done quite well with the Qs, and that is wonderful. That's the way that you do your investing and or trading, whether you're in for the short term or the long term. Now, lastly, we're going to go to gold on our 2-day chart. Gold is technically down, crossed over going down on the 2-day chart back on the 8th, the candle ending on the 8th of August. And if we look at our 4-hour chart, what do we see? 4-hour chart is also in a down move. Those of you who've been using that for trading, it has served you well. Crossed over going down on the 5th and is still in a confirmed down move. So that is where we've wrapped up the charts as we ended the day on Thursday the 11th, as we get ready to go into the last day of the week, Friday the 12th. Of course, we'll be bringing you over the weekend our weekly review and forecast for the following Monday, all that entire week. Remember, the weekly review and forecast is our review of what affected the market over the past week and what may be affecting it over the next. We also look, as we do one time a week, at our weekly chart, our double long chart. Remember, all things being equal, the market always moves in the direction, always tends to move in the direction of the biggest chart, and that would be the weekly. It's why it's important to tune in. We'll also record our Monday show, so we'll have 2 things for you that'll be produced and out over the weekend, the weekly review and forecast, and the daily review for Monday. We appreciate hearing from you. You want to help us out at Charting Wealth, please go and subscribe to our podcast at iTunes. Give us a 5-star rating, say something nice about us, and also, once we hit 1,000 subscribers at YouTube, we'll be able to send those subscribers proprietary broadcast. We have to have that magic number of 1,000. I know thousands listen every week, but having that hardcore subscriber base is what counts. Help us out. Go there. Subscribe at YouTube to the Charting Wealth Podcast. Thank you so much, folks. God bless you. Let us hear from you. If you hadn't already signed up for our newsletter, you need it. We'll send you a video podcast every day if you sign up with your email at chartingwealth.com. Let us hear from you. Let us know what you need. Get all the trainings there, plus this daily review and the weekly review once a week. God bless. Great to hear from you at chartingwealth.com.